Well, now we're going to work through how to solve some of these problems associated with accruals and deferrals. So let's get rolling here. Number one, classifying adjusting entries. Said we're going to look at each of these entries and decide what flavor it is. Let's go from here down. To record this period's depreciation expense. Well, that looks like right there, doesn't it? Debit depreciation expense, credit accumulated. So that's A. So that is number, we'll do it the other way. That is number 5. Okay. Letter B, to record accrued salaries expense. Bingo. Salaries expense. Debit salaries expense, credit salaries payable. So that's number 6. C, to record this period's use of a prepaid expense. Bingo. Insurance, debit insurance expense, credit prepaid. That's number 2. Right. Letter D, to record accrued interest revenue. Interest revenue. Accrued interest revenue. Interest revenue. Here we go. Credit interest revenue, debit interest receivable. Number 4. Letter E, to record accrued interest expense. Interest expense. There we go. Number 1. Debit interest expense, credit interest payable. That's number 1. And lastly, to record earning of previously unearned income. So we're going to move income from unearned to earned. Unearned to earned. Here we go. Debit unearned professional fees, credit professional fees earned. Number 3. Okay, just some examples here. Let's move on now. Let's adjust some prepaid expenses. So, number 1, on July 1st, Lamis Company paid $1,200 for 6 months insurance coverage. No adjustments have been made to the prepaid insurance account, and it's now the end of the year. Prepare the journal entry to reflect expiration of the insurance. Okay. First, the original entry. The original entry. We would have set this up with a debit to prepaid insurance. And what we have credited, we would have bought the stuff, so we would have credited cash. And they were both for $1,200, I think. So there's our original entry when we did it. We debited, prepaid, credited cash. Now, it's 6 months have passed. Let's analyze what we did. We paid $1,200 for 6 months of insurance coverage. Sounds like $200 a month to me, huh? It's now the end of the year. So we did July 1st. Now it's December 31st. That's 6 months, so we want to expense it all. So let's debit insurance expense for $1,200 and credit prepaid insurance for $1,200. So there's our entry right there. There's our entry right there. Raven's purple. Okay, let's see how you did on number 2. Shandy Company has a supplies account balance of $5,000 on January 1st. During the year, it purchased $2,000 of supplies. And as of the end of the year, supplies inventory shows $800 left. We want to do the entry, the adjusting entry. So, what's the amount of supplies were used? Well, sounds like the cupcake formula to me. We started with $5,000. We bought $2,000. Then we went in the storeroom and we counted $800 left. So how many were used? Oh, sorry, I left the word left out there. 5 plus 2 is 7. 7 minus 800 is 6,200 used. So what's our adjusting entry? Huh? Our adjusting entry. Well, we're going to record the fact that we've taken supplies out of the supply closet and used them up. So we're going to debit supplies expense for 6,200 and credit supplies 6,200. I don't think I spelled that. EXPE NSE. There you go. You see, you had to use the cupcake formula to get there. Page 2, Jasmine Culpepper, because we're going to accrue salaries. Accrue salaries. Employs one college student every summer in her coffee shop. Student works the 5 weekdays and is paid the following Monday. For example, a student who works Monday through Friday, June 1st through June 5th, is paid for that work on Monday, June 8th. She adjusts her books monthly, if needed, to show salaries earned but unpaid at month end. The student works the last week of July, and Friday is August 1st. So if the student earns $100 a day, what should we do? So let's see what we got here. We got Monday, Tuesday, Wednesday, Thursday, Friday, and Friday is August 1st. Okay? So if that's August 1st, then these guys must have happened in July. So how many days apply to July? 4. How many days apply to August? Just 1, Friday. How many dollars of her salary then applies to July? She made $100 a day. Looks like $400 applied to July and $100 to August. So what's our adjusting entry? Well, I'm going to debit salaries expense for the $400, and I'm going to credit salaries payable for $400. What if you use wages payable and wages expense? It's your company, do whatever you want. Hey, lastly, we're going to adjust for unearned revenue. So Tao Company received $10,000 cash in advance for 4 months of legal services on October 1st and records it by debiting cash and crediting unearned revenue. There it is, right there. On December 31st, and they've done the work. What should we do? If we've done all, and I believe we've done all the works because it was 4 months, and we've got October, November, December. October, November, December. We haven't done all 4 months, have we? We've just done 3 months worth. So we're going to debit revenue for 3 months worth, October, November, December. It's $10,000 for 4 months. That's $2,500 a month. So 3 of them will be $7,500. And then we're going to credit what? Unearned revenue. I didn't spell it so good. EU. How about EA? $700 or $500. There you go. There you go. If you didn't do how you'd like on them, print out a blank one, do it again.